Hello and welcome to NetEase Investment. This analysis is for NetEase on NASDAQ as of 20th of July 2026 with a share price of $134. The full report is on donatien.ca. 1 issue. NetEase is a cash-rich Chinese games compounder. Around 30% margins, $24 billion of net cash and an attractive valuation. And the tape just confirmed a fresh uptrend that flips the technical entry to MET, so it rates a full-size buy across all three horizons. The one caveat is the structural China-ADR and VIE tail. NetEase is China's number 2 games publisher behind Tencent, earning nearly all its profit from self-developed and licensed online games. Evergreen franchises like Fantasy Westward Journey and Justice, plus newer global hits such as Naraka Blade Point, Marvel Rivals, and Where Winds Meet. It runs around a 30% net margin, converts almost all of its profit into free cash, and sits on roughly $24 billion of net cash, about 28% of the whole market value. This is a cash-rich, high-margin compounder, not a growth multiple story. On our warranted multiple anchor, NetEase trades at about 16 times clean earnings against a fair value of 17.5, so it sits in the attractive band even after a 5% rise since the last report. Strip out the net cash and you're paying only around 11 times earnings for the game's engine itself. The street's consensus target, near $154, is about 15% above today, with 82% of analysts rating it a buy and a top financial health grade. The cash pile and the global title pipeline are largely free, upside the China multiple ignores. What changed since the last report is timing. Every higher time frame is now in an uptrend. Price has reclaimed both the 50 and 200-day averages, and there is a weekly resistance breakout, so the technical entry path is confirmed rather than a chase. That lifts the conviction ladder to full size, with 2 of 3 entry paths met. The underlying driver, Chinese gaming demand, the strongest title pipeline in years, and a routine monthly game approval regime, is a medium and long-term tailwind. Near-term, it is neutral on a soft home consumer. So the buy leans on quality, value, and a confirmed trend rather than a driver kicker. The risks here are structural, and they stay loud. NetEase is a Chinese ADR on a variable interest entity structure, so it carries a real delisting tail under US audit oversight law, plus capital control risk, and a dependence on the SAMR game approval regime. A freeze in approvals would break the case. It competes hard with Tencent and a rising MiHoYo, and its home consumer is soft, with second quarter Chinese growth at 4.3%. None of these is a live, imminent event today, which is why the safety gate reads caution rather than a hard stop. But the bear case is a 19% drawdown to $108 on a China-ADR D rating. Size it as a satellite position, not a core holding. Now weigh the risk against the reward. The bull case is roughly 27% above today, the base case, the most likely, about 12%, and the bear case a fall of about 20%, so you are risking about 20 to make 27. So our call on NetEase, on NASDAQ, buy. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donatien Investment at donatien.ca. The link to the full report is in the notes below. Have a great day.